Are you ready to dive into options trading, but worried you might make some costly mistakes along the way? Well, you're not alone. Options trading can be a powerful way to build wealth, but if you don't know what you're doing, you could burn through your account faster than you'd expect. Now in this video, I'm going to show you some of the mistakes that I've made along the way and give you some insights and tips to ensure that you don't repeat these mistakes so that you can have a more profitable journey in trading options. So mistake number one is skipping the basics. So when it comes to options trading, understanding the fundamentals is essential. You simply cannot be a good trader without putting in the time and effort to learn how the market works, to do proper chart analysis, understanding and preparing your risk management, understanding proper sizing, and so on. You have to get these things down if you're going to take trading seriously. Now, I always tell my clients, you should never trade without first comprehending exactly what you're doing and the expected risk or reward. Now, most people don't have the willingness to put in the effort to truly learn options, and diving into the market like that is just basically gambling, right? It's just gambling. So, what can you actually do to learn? Well, you definitely don't want to be a gambler. You want to be someone who's trading based on proper signals and proper understanding of the market, right? So you want to be going into a trade with very, very high conviction. And one of the easiest ways for you to do this is to lean on the experience of others who already have a good track record of not just trading well, but also helping others to do the same. In other words, you should definitely get a mentor. Outside of that, you want to read books and watch related videos while practicing daily to implement what you learn. Alright, so in terms of a mentor, just be careful with people on YouTube. There is a difference between a content creator, someone that makes good videos about trading, and someone who actually trades. Alright, so if you want to work with someone who's actually trading on a daily basis and actually implementing the steps that you're going to see in this video and really taking trading seriously, then you have two options. The first is to go down to the description below and click the first link you see in the description, and this will allow you to sign up to my mentorship program, the Trading Odyssey, where you can join me on a Zoom call one-on-one twice per week for 4 weeks, where I basically walk you through the fundamentals of trading and help you get set up so that you can actually start making your first profitable trades within a month. Alright, the second option is to join my favorite trading group. This is where I learned to trade, this is where I learned the fundamentals, and I got my first winning trades, and this is what have given me the confidence to trade on my own. It's called the Honey Drip Network, and it will be the second link in the description. Now, either of these options are super good. I definitely recommend tapping into the mentorship program or the Honey Drip Network, whatever it is that suits your needs. If you want more one-to-one and hands-on guidance, then definitely tap into the mentorship. If you're looking for a collective community where you can trade alongside many other people who are on the same journey, then definitely tap into the Honey Drip Network. Alright, so that's the first mistake that you want to avoid. You want to avoid skipping the basics, and you can learn the basics by tapping into a mentor, tapping into a trading group, or just doing your own research and due diligence over time. Alright, so let's take a look at the second mistake. So this was something that I took for granted when I first started out. I use a Thinkorswim platform to execute my trades, but at first I had no idea how to use the platform. I just watched a few videos on YouTube and I was doing some training and just trying to implement what I learned from that training, but I didn't realize that I had to put in work to actually fully understand what the platform is, how it works, and what all of the different things in the platform actually meant. So what actually happened was that I was doing stuff like trading with unsettled funds, which is putting my account at risk. I had no idea what unsettled funds was, and I had to basically just tap into their support, which the Thinkorswim platform has really good support, and I asked them like 1,000 questions. But by the time that I realized that I didn't really know how to use the platform, I was already down $600. and I could have avoided all of that by just taking the time and doing the due diligence to learn how the platform works, what each button does, what each feature in the platform does, and how to execute my trades the best way using the trading platform that I was using, right? And if I had done that at first, I could have turned that $600 into tens of thousands of dollars, really. So this is mistake number 2, and not a lot of people talk about this, but you really need to take the time to learn the platform you're using. Alright, so definitely reach out to their support team and read as many of the articles that they have on their website as possible. You also, again, you want to do some research on YouTube to just see how other people use the platform, but just be careful. Again, there is a difference between content creators and people who actually trade. So don't fall for people who are just making trading videos. Try to find people who actually trade and are good at trading, right? And are good at teaching others how to trade. So that's mistake number 2. Let's take a look at the third mistake that beginners often make. So the third mistake, and this is something that I'm again guilty of, it's not understanding the expiration dates. So holy cow, this one really tripped me up. I had no idea how expiration dates affected the value of my contracts in terms of the implied volatility or just overall profits and losses. I was mostly buying contracts that expired within 1 day or a few days at most. Needless to say, if the price action didn't go in my favor within that time frame, I would end up biting my nails and hoping for miracles which never came. And since I stopped doing this, I feel much more confident in my trades, and even if the price action doesn't go in my favor right away, I'm not worried. And this is because I'm buying contracts with expiration dates that are further out. And what I mean by that is, instead of buying contracts that are going to expire today, you want to buy contracts that are within your budget, but they're expiring within a week from now, or 2 weeks, maybe even a month out. But just be aware that the further out the expiration dates are, the more expensive the contracts will be, and the less the price or the value of the contracts will react to immediate changes in the price of the overall stock. Alright, I'm going to show you what this looks like in a second. So this is actually the biggest insurance you have in the game, especially if you don't have a lot of capital to trade with. This way, you can sit back and wait for the right moments for your plays to set in and for you to take profits over time, right? And you don't have to rush. And this strategy works well whether you're swing trading or day trading, right? So when I'm day trading, I like to buy contracts that are at least 1 week out, right? And I still take my profits within the same day, but just in case something happens in the market that I didn't budget for, I don't have to panic. I can just wait a few more days and see if it will actually get closer to my price prediction, and that way I can manage my losses a little bit better, right? But it is still good to trade lower expiration times, because they do have higher volatility, which means you can gain profits really fast. So if you want to do a quick 10-minute, 30-minute, 1-hour trade, you can definitely trade contracts that are expiring the same day or within a few days. But just be mindful that the closer the expiration dates are, the more volatile those contracts will be, and the possibility of you losing out on those trades are higher. Alright, and also you definitely don't want to hold your contracts until the expiration dates expire, right? Because if you allow the contracts to expire, they will have zero value. The closer they get to the expiration dates, the less other people will want to buy them, and so the value of those contracts will fall. So you definitely want to buy contracts with high volume, with a lot of people looking to buy them, and these contracts are usually not the ones that are closest to expiration. Alright, so that's mistake number 3, and let's have a look at mistake number 4, and this is a big one. And mistake number 4 is something that I am again guilty of, and this is overconfidence. So I'm a very smart guy, and it kind of gets to my head at times. Once I started trading on my own and having success, I started to think that I could not lose. This led me to forget about all my risk management and just go all in on trades. And that's a sure way to blow your account. I had to learn that the hard way, like the really hard way. Now the key is to stay disciplined and don't start thinking you're Superman or woman in the trading world. It's slow and steady wins consistently over time that makes you a six-figure trader. Alright, so you don't want to think you're gonna go in and flip your account every single trade. You're not gonna always do 100% trades. Someday you're gonna do a 5% trade. Someday it might be 30%. Someday you might just break even. Someday you might take a bad trade. You have to learn when you're wrong. Alright? So you can be wrong. And this is all gonna come down to risk management and having a good trading plan, which we're gonna touch on a little bit later on in the video. So with a good trading plan, you already know your levels. You know what price points you're watching and how you're gonna react when the price gets to that price point, right? So from there, all you have to do is execute your trading plan and you'll be good. Now that's mistake number 4. Let's take a look at the 5th mistake that many traders are guilty of, and it's one of the reasons why they blow their account many times. Alright, so let's take a look at mistake number 5. And this is not having any patience. Now in the trading world, there is a saying: plan your trades and trade your plans. Before the market opens, you have to put in the work to analyze the markets and decide which stock you want to trade and how. If you are really good at analysis, then you will be able to constantly pick winners. However, that's only half the battle. The next half is actually being able to trade according to your plan. Not panic selling, not getting into your trades too early, not FOMOing into something completely different from what you planned. You have to be patient for your plan to work and for your setups to happen. So what I mean by this is that you're going to take the time, do your due diligence, whether you're doing this on your own or you're trading with a group, but whatever you do, you want to analyze the market before the market opens. You want to plot your key levels and you want to check for any upcoming news or any market changing or market moving events that might be happening on the day or whatever time frame you're going to be trading on, right? And once you do this, this is going to help you to draft up a plan, a trading plan that's going to tell you, okay, I'm going to trade this stock, and when the price of this stock rises to this level or falls to this level, this is how I'm going to react. Alright? And let's say you say that you're going to trade calls at point A. So let's say the price gets to point A and you're trading calls, but it's not going in your favor. You also have to have a exit strategy. So you know that, hey, if it goes 5% beyond what I predicted, I'm getting out of this trade. Or let's say if it goes 5%, I'm not going to get out of the trade quickly. I'm going to still hold on and I'm going to give it room to 10%. So I'm going to give myself 10% margin of error, and if it gets to that 10%, then I'm out of the trade. But until it gets to that 10%, I'm going to believe in this trade, right? And this is what patience is all about. A lot of people will say risk management or this or that is the most important part of trading, but in my experience, patience is the #1 thing, because you can know how to trade, you can know exactly what the market is doing, and you can know the perfect high probability setups that you like to trade. But if you don't have the patience that allows you to get in and out of these trades at the right time, then none of that matters. Alright, so that's mistake number 5, not having enough patience. So let's take a look at mistake number 6. But before we do that, if you haven't already, do take a second to like this video. That's all I ask, to help give us a boost in the algorithm so that we can continue feeling motivated to produce this kind of work, because we really don't have to. We can just continue to trade, but I feel compelled to share some of my knowledge and experiences with the YouTube world to help others who are on their journey as well, right? So all I ask, give us a like, and if you can, do subscribe so that you can continue getting videos like this to help you on your trading journey. Alright, so let's move on to mistake number 6, and that is poor chart analysis. Now, regardless of where you are in your trading journey, you're going to have to put in the effort to understand price action and how the market reacts at key levels. Failure to do this means you will never be able to trade on your own. Thankfully, this is quite easy to do, and you don't need a master's degree to be able to read charts. Now, I'm going to show you a quick tutorial on a few of the things that I look for when it comes to chart analysis, but just bear in mind that chart analysis can get really deep, or it can be really simple. It all depends on your trading style, who you are, and what you think works for you. Okay, so that was mistake number 6, poor chart analysis. Now let's take a look at the 7th mistake that beginners are often guilty of when it comes to trading, whether it's day trading, swing trading, leaps, even if it's not options trading. Like a lot of people when they're trading Forex or crypto, they make the same mistakes. But let's take a look at that mistake right now. And this is mistake number 7, which is trading with your rent money. Well, it doesn't have to be your rent money. It can just be the last money that you have or money that you just need for something else, right? So you don't want to trade with the last time you have. That will have you super emotional and unable to separate your feelings from your trades. Instead, you want to set aside some money that's just for trading. If you need to save some money to get to a comfortable point where you can dive into the market, then save the money. But the cash you use for trading must be specifically for trading and only for trading. That means if, for example, you lose all of that money in one trade, it won't affect the rest of your life, right? So you won't be worried that, okay, if I don't make a good trade today, I'm gonna lose this roof over my head. I'm not gonna be able to pay my bills. I'm not gonna be able to send my kids any money, or I'm not gonna be able to pay my car note, right? So you don't want to trade with the last dime you have. The goal of trading is to get there eventually, not to get there overnight, all right? So I would recommend that you practice with, let's say, $100 to $2,000 for 90 days at first. Now, when you can be profitable for at least 30 days, then you can go deeper and be more confident that you can do this and live off your trading skills. But until you can get 30 days worth of consistent profitable trades in, then you're just still in the learning phase, right? And you only want to have learning money trading with, all right? So that's mistake number 7. Let's have a look at another important mistake that you definitely want to avoid. That's mistake number 8, and this is over trading. Now, it can be tempting to take every trade you see. That's only going to defeat the whole purpose of trading, which is to give you back your time and freedom. You don't want to be there all day watching the markets and buying every dip or selling every peak. You just want to get 1 to 3 good trades under your belt each day, then move on with your life. Heck, you might just need only 1. The more winning trades you take, the more confident you'll be. And the last thing you want is to be trading successfully all day and then you take a bad trade and it just ruins your mood. So now let's take a look at mistake number 9. And this is a big one and I want you to pay attention, alright? So mistake number 9 is quitting. So maybe you've made a few bad trades and now you're thinking this isn't for you at all. You're ready to quit. Man, don't quit. Quitters never win. Instead, go back to the drawing board. Look at what you did wrong and what you did right and learn from that. Come up with a plan of action to do better next time and take the time to implement that plan. And if it helps, join a trading community or get a great mentor. Now, once you quit, of course you can't win. But you don't want to stay trading and keep doing the same thing that caused you to blow your accounts or to lose in the first place, right? So let's take a look at mistake number 10 and we're going to avoid that mistake. And that is being superstitious. So let's get this out of the way. The market is not against you. The market is your friend and the market does want you to win. It doesn't care if you're black, white, or brown. It doesn't care if you're rich or poor, nor does it care for where you live or your religion. It doesn't even care if you failed at everything else you did in life. And the universe is not against you either. There is no magical force out there that's trying to keep you from breaking out and breaking free. It's all within your reach, and you can really do this. You can make it. You can build wealth and legacy and live like a king or a queen. You just have to believe. So that's the final mistake. And these are 10 things that I've discovered on my journey as a trader. And I just wanted to share them with you so that if you're new on your journey as well, you can be aware of these things so you can look out for them and avoid them so that you can have a much smoother journey and have more wins than losses and have bigger wins than losses. Alright, so thank you so much for tuning into this video. I hope you got value from it. Please let me know in the comments your biggest takeaway from the video, and if you have any questions, feel free to ask. I'm more than happy to help. Also, do not forget to like, share, and subscribe to help the channel grow so that I can continue to bring more insights to help beginner traders on their journey. Now, if you need some more hands-on guidance and you'd like to work with me one-on-one, click the first link in the description and sign up for my Trading Odyssey program today. This way you get to work with me one-on-one over a period of 4 weeks, twice per week, via live calls and Zoom. And I'll basically show you everything that I know to help you make your first winning trades within 1 month. Alright, you can also click the second link in the description to check out the Honey Drip Network, which is a community that I trade alongside, and it's very good and can definitely help you as well. So, thanks for tuning in, and cheers to you for taking the time to become a better trader. I'll see you in the next video.